You ever stare at a stock chart and just see, well, a total mess? A jumble of lines that feels completely random? What if I told you there's a hidden order to all that madness? Today, we're going to crack open one specific trading system that claims to find a predictable map right in the middle of all that financial chaos.
You know, it's the big question, isn't it? Is all of this just random noise, or are there actual, real patterns hiding in plain sight? This is exactly where trading systems come into play. They're all built on this one powerful idea, that even chaotic crowds tend to follow predictable rules.
So, that's our mission for this explainer. We're going to deconstruct the core mechanics of one of these systems. We're going to look right under the hood, see how the engine really works. Let's dive in.
So here's our game plan. We'll start by finding our daily map, what the system calls the center of the Big Bang. From there, we'll locate the market's real center of gravity, the value area. And that unlocks the system's core prediction, the powerful 80% rule. Then we'll see how this all works in the real world and cover the one rule that, honestly, trumps all the others. All right, first up, the center of the Big Bang. See, before any big moves happen, the system needs to draw its map for the day. This is kind of like the "you are here" marker on a map, and every other move is measured from this starting point. This map gets defined by two lines, R1, or resistance 1, and S1, support 1. Just think of them as the initial roof and floor for the price. The system predicts that something like 98% of the time, the market's going to open inside this box. This is it, the center of the Big Bang, the launch pad for the rest of the day. And what happens from here is often pretty predictable. Price starts inside the box. Then it moves to test either that roof or the floor. Now, if it breaks through, that's a signal that the market might be, unleashed, and it's heading for the next level up or down. So these lines become the first major decision points of the day. So we have our starting box, but to make it really useful, we need to add a much more powerful concept. And this is arguably the single most important part of this entire system, the value area. So what is the value area? It's simply the price range where most of the trading happened the day before. The source material calls it a whirlpool or a center of gravity, which I think is perfect. It's the zone where buyers and sellers basically reached the biggest agreement. It's the market's comfort zone. And this isn't just some fuzzy idea. It's a hard number. The value area is specifically the zone where 70% of all of yesterday's trading volume took place. So it's not defined by an opinion, but by the overwhelming consensus of the market itself. Okay, you with me? We've set up the daily starting box, and we found the market's center of gravity. Now, we get to the payoff. This is where we combine those two ideas to create the system's most powerful predictive tool, the 80% rule. So here's the setup. The rule only kicks in when the market starts the day outside of yesterday's comfort zone. That's our first big clue. Something has changed overnight, pushing the price to a level where there wasn't a lot of agreement before. The second condition is the trigger. After opening outside, the price gets pulled back into that value area. Remember how we called it a whirlpool, a center of gravity? Well, there's a reason for that. This action means the market is getting drawn back toward yesterday's consensus price. And here's the prediction. Once the price opens outside and then gets sucked back in, the system says there is an 80% probability it will travel all the way across that value area and pop out the other side. It's a really powerful if-then signal for where the market is most likely headed next. Okay, so how does a trader actually use this in practice? Well, the system boils down the market's opening behavior into two very distinct scenarios, and it's all based on how the price interacts with that all-important value area. It really just comes down to this. On one hand, you have initiating activity. This is when the price opens outside the value area and, this is key, it stays there. The system reads this as a powerful move, probably by big institutions. A new trend is forming, so the idea is to go with the flow. On the other hand, you have responsive activity, and this is our 80% rule in action. The price opens outside but gets pulled back in. This suggests the market is rejecting those new prices, and the expectation is that the price is going to get drawn all the way across to fill the zone. So we've covered the mechanics, the rules, all the algorithms, but the source material is crystal clear that none of it, absolutely none of it, works without the most important component, the human trader, and more importantly, their mindset.
This quote really just gets to the heart of the whole philosophy. The purpose of this system isn't to generate constant action. It's not about being right on every single trade. The number one goal is risk management. It's about making decisions that protect your capital, first and foremost. Trading is just how you get that done. And that brings us to the final, and yeah, probably the most important rule. A system like this is a tool for interpretation. It's not a crystal ball. It gives you a map to help you navigate the market's chaos, but a map is totally useless if you don't have the discipline to follow it, especially when fear and greed start whispering in your ear.
Which leaves us with one last thing to think about. Can any system, no matter how clever, truly tame the wild psychology of the market? Or maybe, does it just give us a better way to listen to what all that chaos is trying to